Okay, this is part one of a multi-part series on the stock INTU and how to get in to a growth stock and what to look for. This is kind of like a template. I just saw this area right here, this time frame, this consolidation from 2002 to 2010. So the area I want to focus in on is what was going on during basically this time and really the breakout right here, to see how we could have spotted that, or even maybe here. So again, here is the long-term chart from 1994 going to 2002, and I'm focusing in on this breakout right here to the $30, from the $30 area all the way up into the 600s. Okay, so let's zoom in here to a weekly chart and then jump to the time frame we want to look at. I believe it was maybe 2002. Let's start there. And here we go. So the original high was from back here in 2000 to about the $35 level. And I want to focus right in on maybe this little breakout here. We get a nice contraction, the stacking of these moving averages, and then a breakout right here on that candle. And here we see the breakout that we were looking at. Actually, it's sub $30, and so in the weekly it looked like it kind of happened right around here, maybe $35. So if we notice the time frame that we got this gap, it was probably an earnings related gap, but we know a year earlier, in the first quarter of 2009, we had the March bottom when Bernanke gave his Jackson Hole speech and mark-to-market accounting was suspended. But here in the first quarter of 2010, let's start from there to see the earnings reports around that time frame to see if there was something especially intriguing about INTU, and if we could have used its earnings growth then to use as a template to spot future companies with the same kind of explosive price and earnings growth. Now, if we go from the daily chart of INTU on over to the INTU Investors Relations webpage, we can see a list of the annual reports. Since that breakout occurred right in the first quarter of 2010, I'm going to start from 2010 onward, and we'll start with that analysis of the financial statements in part 2 of this series. All right, thanks for watching.